All right, rule breaker mailbag items number 6 and 7. We're going to combine 2 here because we're about to talk about, oh my golly, is David Kretzmann in the studio?
Oh, yes.
We're about to talk about the Gardner-Kretzmann Continuum.
GKC, baby. Woo!
It is one of the most important investment developments of 2018. I think we've talked about that previously on this podcast. Any regular listener knows what the Gardner-Kretzmann Continuum is, but I'm sure we have some new listeners this week. So, David, before I read these mailbag items, can you just briefly summarize the GKC?
So all you got to do is take the number of stocks that you own. So for example's sake, let's say you own 50 stocks divided by your age. Let's say you're 25. 50 divided by 25, your GKC score is 2.
Which is a huge number. I think most people don't realize that they could own that number of stocks, or they might think it's crazy to own 50 stocks at the age of 25. Although, David, I think you have maybe even a higher ratio?
I think it's over 70, so I'd say my ratio is probably closer to 3. And I think the agreement that we've come to over the course of the year discussing after creating the GKC score, David, is that we want your GKC score to probably be at least 1 or higher. So just a rough barometer to follow as an investor.
Love it. So that's a quick introduction. And now, mailbag items number 6 and 7. This first one comes from Jeff Brown. Jeff writes, "Greetings. I've enjoyed the RBI podcast along with most of the other Motley Fool podcasts for the last few years since I started listening to podcasts. I have a long commute," Jeff writes, "and they help me pass the time in an informing and amusing way. My one complaint is that I no longer listen to as many audiobooks as I did before podcasts." Yeah, kind of makes sense to me. There's only so much time, right?
Yeah.
All right. "I was temporarily relieved to hear about the GKC," Jeff goes on, "as I'd thought myself as a hoarder of companies. Best type of hoarder to be, at least." He says, "I'm turning 53 this month. I figured I probably had investments in about that many companies. I hadn't counted them in a long time as my portfolio just grew enough not to worry so much about diversification. I was a bit surprised, though, to count 76 different companies plus about 15 funds. Most of these were recs from Hidden Gems, Stock Advisor, and Rule Breakers. I still think I have a bit of a hoarding issue as I love buying into new companies, then benefiting from their growth and getting a bit of a kick out of telling my family, hey, we own such and such company when we come in contact with a product or a service that one of them provides. My question is related to adding to winners. I would like to get your thoughts on 2 common guides mentioned by the Motley Fool and how these relate: adding to winners and buying in thirds. So we're going to get to that in a sec. That's one question. And then also to the GKC. Mailbag item number 7, P.D. Ewing coming back, pointing out we may have mispronounced P.D.'s name previously. We do make a big effort, David, to nail people's pronunciations.
We try very hard, but we don't always get it right.
It was spelled P-E-D-E-E. You went with?
Pede, I think.
Right, but I think we've received this mailbag item, and I think PD's pointing out it's just pronounced PD.
Yep.
So that's what we're going with this month. But here's the question. PD starts, "Thanks for your wisdom and caring for your truly improving the lives of your fellow man." Well, that's a wonderful thing to hear, and thank you very much, PD. "I'm curious as to the ideal size of a position. I'm on track," PD writes, "to have my GKC index at 1 with 27 different stock advisors, starter stocks, and new picks. Once I reach this goal, each position will only be 1 or a few shares for each of those 27. As I add more new picks, what's an ideal approach to position size, etc.?" So both of these questions about the GKC. David Kretzmann, illuminate.
Well, this isn't the best, clearest answer, but I'd say it really does depend on your situation. I would say these 2 listeners writing in, it sounds like they're at a stage of their lives, certainly in PD's case, where they have years in front of them to invest. They'll most likely be adding new capital to the amount of cash that they're adding to stocks.
And I also want to say that Jeff Brown, who was our first guy there, is 53. And I sure hope, since I'm going to be turning 53 this coming year, that he also has years and years to invest.
Absolutely. Yeah, decades to invest. So we're optimistic here. And absolutely, we're talking here about people who will be adding new money to their investments for years to come. And I think in that situation, position sizing today isn't quite as important, because if you have new money to add, you can start a smaller position, follow the company, and add to it over time. If you're someone who's closer to retirement, or you're dealing with more a fixed amount of dollars, you're not necessarily going to be adding new cash to that, then you probably do want to think more about, okay, I'm going to stick with a specific number of stocks. I'm going to target an allocation, whether it's 2 to 5% or 8% for each position. But yeah, in this case, especially if you're starting out and just adding, a couple $100 a month or every couple weeks, whether you're trying to save up to invest a bigger amount in one stock or investing a little bit over 1 or 2 or 3 stocks, I probably lean closer to the latter category, where obviously with my GKC score above 3, like I must be leaning that direction. But if there's a stock that I like, I'll typically just start a small position, and it'll probably be less than 0.05% of my portfolio. So a very small percentage of my portfolio in relative
You're just getting in the game,
yeah,
it sounds like.
Yeah, and I think getting some skin in the game, following along. And then there'll be companies where I've probably added to them 10 plus times over the past 18 to 24 months.
That's great.
And then there'll be some companies where I buy them once and then it's like, just leave that. Not necessarily going to return to it. So it's really going to depend on each investor's circumstances, your risk tolerances. I know, David, in your case, you've recommended some companies like Intuitive Surgical, I think 6 times. You've recommended others 3+ times. So we're not necessarily saying you can only buy in thirds. You don't necessarily need to only buy a company 3 times. But again, it really does come down to each person's circumstances, their risk tolerance. And I'd say it's good for an investor to reflect on the volatility that we've gone through in the stock market this year. I know I personally have seen some of my bigger positions in my portfolio drop 30 or 50% over the course of the year. A lot of that happening within the past month or 2.
Yeah, I feel you.
Yeah, so reflect on that and think, okay, how comfortable are you with a bigger position in your portfolio dropping like that? Do you wince? Do you lose sleep at night? If so, you probably want to aim for a slightly smaller position size for any given stock in your portfolio. But on the other hand, if you're someone who has a stock that's 10 or 15% of your portfolio, it drops by 30% and you don't flinch, then you're probably someone who can tolerate a bigger position size. So again, it really is a range for each person.
Well put. And David, you're in your mid-20s. Talk to me about 2019 if you're just guessing. So from your GKC of approximately 3, we'll just say you have around 75 companies in your portfolio. With the money that you save next year, how much of that money will go toward existing positions? And then how many new stocks do you see yourself buying? I realize we're just kind of making it up, but just give us a general guide for how a guy with an extremely high GKC thinks about investing in the year ahead.
I'd say I'm increasingly prioritizing adding to existing positions. So the majority of the cash that I have available to invest will go toward stocks I already own. So in this case, let's say probably 60% plus of cash next year that I have to invest will go to positions that I already own. Next year will be an interesting year. We have a lot of exciting IPOs on the docket, potentially Uber, Airbnb, Slack, a lot of kind of higher profile IPOs coming in 2019, similar to what we've seen in 2018. So it'll be interesting to see some new companies hitting the public markets. But yeah, in any case, I would say the majority of the new cash that I do have available to invest, I prioritize stocks I already own, but then we'll leave a little bit on the side to start positions in companies that have struck my fancy and maybe, hopefully, will add to down the road as well.
Awesome. So there you go. Mailbag items number 6 and 7 on the GKC. It's really kind of a story of portfolio crafting, and there's no one-size-fits-all cookie-cutter answer to how to build a portfolio. A lot of it does come down to key factors like your age and your enthusiasm, and then how much money you have coming in. Once you do math around those, and then you just kind of ask, what am I working toward? What does my portfolio look like 10 years from now? Do I want to be tracking dozens of stocks? Do I like to spread my money out that much, or do I want to focus some? And even the answer that you have today may change 10 years from now. You may have something different in your mind at that point. So it's all about evolving and adapting as we go, and that's what we're here to help with here at Rule Breaker Investing.